Welcome to the Authentically American podcast, featuring inspiring stories from great Americans who are making a difference. Your host is West Point grad, former Army Ranger, and founder of Authentically American, Dean Wegner.
Well, Claire, thank you for joining us here on the Authentically American podcast. It is absolutely a pleasure and a privilege to have you as a guest.
Well, thank you very much. It's my privilege. Excited about it.
You know, it's exciting to be here in CapStar's relatively new headquarters, right here in downtown Nashville.
The galactic headquarters. Yes, we've been here 2.5 years now in this location. So
fantastic. And we want to touch on a lot of the CapStar journey because, I mean, your whole story in the banking industry and what you've done is an amazing one. But I want to go all the way back, in an early age. And I've found so often people's formative years, those early childhood years, oftentimes shape where they become today. So tell me a little bit about those days. Give me a glimpse of your childhood.
So I was born in Mississippi. My grandfather was a banker.
Okay.
In Emerita, Mississippi. I grew up in South Georgia. My dad was a banker. Probably the early formative recollection I have is Sunday afternoons back when gas was 29 cents a gallon. We would all get in the family car and drive around to different real estate projects my dad was financing. So I got a taste early on about just the process of looking at percentage completion and understanding draw requests for construction projects. So really piqued my interest in becoming a banker.
So literally, banking was in your blood.
Literally, yeah, literally.
Was there any ever question about you're going to anything different, or with your grandfather and your father in banking, you knew that's the path you wanted to go?
I really knew. You know, my degree is in accounting. My undergrad degree is in accounting. I have my graduate degree in banking, but my dad always said if you at least get your degree in banking, you can go into any field. Excuse me, a degree in accounting. But I think I knew all along that's what I wanted to do. So,
did you like the accounting class?
I love it.
That was my least favorite.
Oh, no. I love it because it's black and white. You're either right or you're not.
Got it.
So, no question about it, yes.
So what were some of those jobs that when you were following around your dad or your grandfather early on, did you do any work in the bank with them? Or? No.
I never worked for my dad.
Okay.
And I actually never knew my grandfather. He died the year before I was born. But had a great reputation as a banker in Mississippi. So. But no, I never worked for my dad. My first job in banking was 3 weeks after I graduated undergrad. I moved to Nashville and started working at First American and worked there in that same building for 25 years.
Wow. So what was that first job?
The first job, I was a management trainee, which meant I had an opportunity to go to different departments, which probably was one of the best things that I could have done in my career. Oh, yeah. Because I was able to really learn and gain appreciation for the back room and what made the company tick. It wasn't just about being out front and being a banker to the community. It was about understanding the back room there, though. But I was quite disappointed my first year when I discovered that the bank did not close for spring break. That was a rude awakening for me. But it gave me an opportunity, and then I migrated more towards being on the front line, which is what I've done all my career.
Fantastic. So 25 years there.
At that building and at that bank, yeah. So
did you even have any thoughts or aspirations early on that you'd be the CEO of a publicly traded bank?
Not a publicly traded bank, but I had a woman who worked at First American with me, had a group of women for lunch one day, and we went around the room, and she asked each of us what we wanted to do, and I said, well, I'm going to be president of the bank. And she said, oh, no, honey, that's just not going to happen. This is a men's world. And I thought to myself, I'll show you. So
threw down the gauntlet.
Yep, threw down the gauntlet. I never said that to her. I just said, respectfully, I disagree. And when I became president of the bank at First American, the corporate bank, she was the first one to write me a congratulatory note.
Oh, wow.
Which was very classy.
That is.
So she inspired me to reach for it.
So she remembered that moment too.
Oh yeah, she remembered that moment. So yeah. Now publicly traded company. No, I did not really think about it in that context, particularly not taking a company public.
Right. Well, tell me about that, because you had a great run going there to First American. You were the president, and things were going well. And then 2008?
Well, I was at First American until we sold the bank in 1999.
Okay.
I stayed at AmSouth for a year. They were the acquirer. I then took a year off and to test the waters and see if I wanted to do something else. So I did a little consulting gig where I was playing the CFO.
Okay. For
some companies here in town, actually working with the bankers, which was kind of fun in and of itself, because I knew what hot buttons to hit. But I knew quickly that I wanted to get back into banking. So I went to work for Jim Ayers and helped him start his metropolitan banks here in Middle Tennessee, Memphis, and in Knoxville. And then I got the phone call from the gentleman who's now our chairman, who asked if I would take responsibility for starting a bank. So the closest I had ever been to being an entrepreneur at that point was living vicariously through my customers.
Right.
And so it took a big gulp. There's a reason there's not a book that says here's how to start a bank, because most people only do it once. And then
That's enough.
That's enough, yeah. But it's been a very, very rewarding experience.
So what was the motivation that said, okay, you've had a successful run at an existing bank, let's start a new bank? What was it?
I think it was the mission that was there. In the mid-'70s and '80s, Nashville was known as the Wall Street of the South.
Okay.
And the three banks that really were the major players here had 75% market share, but they were local banks. Each of those banks ultimately sold, and so you had a landscape without the local Nashville banks. And so I think just having an opportunity to change that landscape and get back to banking the way it was when I grew up as a banker was very inspiring to me. Plus, it was something different. I was a little bit bored with what I was doing. And,
got tired of poking people as a consultant?
Well, no. I was a banker again for 5 years after the consulting gig with Jim Ayers at First Bank.
I see.
Yeah, and then we started working on CapStar.
So walk me through, because it's daunting just to think back how big of a task that is. So how'd that even start? I mean, where do you even get started? Like you said, there's no playbook.
There's no playbook. Well, it started with the conversation, talked to my dad and said, yeah, this is something we ought to do. But my requirement was, and I told the group of investors, I said, I will do this, but only if my colleague, Tip Evans, does it with me, because he's the brains behind all the operation.
Okay.
And I knew I had to have that in order to make it successful. And so we literally started out in a conference room down on 2nd Avenue in May of 2007. We each had a job. One person went to Staples to get office equipment. Tip was required to figure out what operating system we wanted. One individual had the most important job, and that was going to the state of Tennessee to get our payroll ID so we could get paid. And then I was really about doing the regulatory filings, building the pro formas, putting the business plan together. Took us 59 rounds on the pro formas.
59.
Before we got it just right. But interest rates kept moving on us.
Yeah.
So you had to recalibrate all of that, because when we started working on it, prime was 8 1/4. When we opened the doors, it was 5 1/4. And by December of 2008, it was 3 1/4. So we had flat rates for 7 years. And that changes the dynamics of the financials.
Wow.
Pretty handily, yeah.
So I had no idea. So.
Yeah, so it was fun, yeah, and it was, that was at a time, had we waited 6 weeks to raise our money, we raised $88 million in about 8 weeks. And had we waited another 6 weeks, if we had delayed it, we wouldn't be here today, because that was when Bear Stearns crashed, Lehman Brothers crashed, and you had the whole mortgage banking debacle that occurred. So timing was really, really great for us on that, yeah.
So you said, I'll make sure the number's right, so $88 million.
$88 million. Yeah.
And I've raised some funds for investors, with Authentically American, and it's not easy.
It's not easy.
And there's an extra decimal point on the numbers you were raising.
Yeah.
So tell me about that process.
Well, I think Denny Bodorf, who is our chairman, and he was the one that came to me to ask me to do this, we felt pretty confident that there was interest locally in people that wanted to invest in the bank, and so we did not hire an investment banker. We had someone who helped us with really the administrative piece of the subscription agreements, excuse me, and communicating, but we just had a series of either one-on-one meetings with folks we thought would invest $500,000 to $1 million. Then we had some group presentations that we did, and I think we generated 275 investors.
Okay.
We did have one private equity firm that was known to us that called and said, hey, we'd like to invest. So they put in a nice sum of money as well.
So one more institutional, but the rest were more individual investors?
Well, it was private equity. It wasn't really institutional per se. Depends on how you think about institutional. It wasn't like it was BlackRock or someone like that. But so our board probably contributed, the group that we put together as a board probably had invested $35 million. So it was well seated.
Yes.
Yeah. So they were, my board was invested, and they were invested.
Yeah, double.
They cared about what was going on, for sure. So
they got to feel pretty good 10 years later.
Yeah.
On the way.
Well, it's certainly been a challenge with the economy there for, from 2008 to probably 2012. It was a little tough. We had a relatively easy go of it, just in terms of the all of our competitors were inwardly focused for a couple of years because they either had credit problems, capital problems, liquidity problems, and so we were able to take advantage of a team of really, really good bankers that we had put together, go out and call on folks, and we grew the bank to $1 billion within about 3 years.
Wow.
Yeah. So it's been good.
So who were some of those first customers? Were they?
People that we had banked. We had 35 people when we started the bank, 35 bankers, and 35 employees of the bank. And it was people we had all banked through the years, healthcare companies, manufacturing companies, wholesalers, the whole gamut. We focused on commercial real estate as well. Not really any residential, but commercial and then business banking. So that type customer.
It's all about the relationship.
It's all about the relationship, yeah.
And I said, Claire, that's something, talking with your team, you're not afraid to hop in a car, hop in a plane, go visit a customer.
No, that's what I love doing. That's what I love doing, yeah.
Fantastic. So, looking back, early on, I guess one thing I was curious, did you have a coach, a mentor, over your years?
It's a great question. I did. Actually, it's been the same individual that's our chairman now.
Okay.
I've worked with him for about 30 years.
He's triply invested then.
Yeah. And so it's been good to know that I can trust him and I can have candid conversations with him. And I actually spoke to a group of college students this morning, which is why I'm a little bit dry. And I said to them, it's very important that you have a mentor and that you are a mentor.
Oh yeah. Both are equally.
Both are very important. Yeah.
So it's a long relationship.
Yeah, it's been about 30 years. Yeah.
So, as you're looking back at your younger self, are there any things you said, as I look back, anything that you do differently, anything that you change, or?
I always wanted to go to law school, and I had I applied to law school and was admitted when I was working at First American, and I was going to go to the night school here in Nashville because I always thought the law degree would complement what I do as a banker very well. And within 2 weeks of being accepted, my job at the bank changed, and it required me to travel a week a month. And so I had to leave that one on the side. So sometimes I think about going back and doing it just to see if I could do it.
That's part of what I was wondering. What are you thinking into the future? Which we'll hit that here in a little bit. But I know there was a lot of organic growth, but I think over the 10 years there were some acquisitions.
That's correct.
You made as well.
Sure. We've done 3 acquisitions. We bought another bank in 2012. We bought a mortgage company in 2014, really to augment our product array for our personal bankers, our consumers. They do residential mortgages all in Middle Tennessee. And then in 2018, we bought a bank over in East Tennessee to expand into that market and really complement what we were doing here.
I know part of that, Claire, is you're literally buying the balance sheet when you make that acquisition, but those are real people, and I know culture is so important to you. So what have you done to make sure that when you're bringing these banks together, you're making that acquisition, that the culture remains?
That's a great question as well. That's probably as important as anything. You've got to retain your clients, because that's your deposit base, and you've got to retain your employees. And I think we've done really well on both fronts. And it's about being in the markets, being out there, talking to them, learning their first names, learning about their families, being responsive, being supportive, listening. It takes effort, but it's very rewarding. And encouraging. You can't, not one person can do that on their own.
Oh yeah, it takes everybody.
It takes the whole team to have that attitude and really be collaborative. And so that's something we talked about a lot internally when we were putting the 2 teams together from CapStar Middle Tennessee and CapStar East Tennessee. We populated an integration team with people from both markets, both disciplines, both perspectives, to really try to bring out the best in all of us.
Did you track and look at retention numbers, whether it was from a customer standpoint or employees?
I think we retained all of our customers, which is
100%.
Remarkable. It's remarkable.
It's quite a batting average.
Yeah. Remarkable. We may have lost one, but really, really high retention. And in acquisitions like this, usually your loss of customers is at least 10 to 15%. So, and I really attribute that to the team on the ground in East Tennessee.
Oh yeah.
Because they did a fabulous job of really hand-holding the customer base, again, being responsive and letting us know what was working, what wasn't working.
Yeah.
So.
Well, it obviously worked if you're
we're very pleased with that. And part of an acquisition, though, is about gaining synergies. Yeah. And so on the employee side, we knew that we would have some loss of employees, because you don't need 2 human resources directors, you don't need 2 CFOs, you don't need 2 directors of operations. And so there were folks really from both sides. We tried to pick the best.
Yeah.
It wasn't just about taking out the cost just on the East Tennessee side. So we stepped back and really looked at who the best people were for this, that, and the other.
Yeah, I know. A lot of people, when acquisitions occur, I mean, just going back to the customer side, they get nervous. Like, my bank that I've always known and loved and the relationships, what's going to happen?
Yeah. And when you change the signage, change the name, that's very emotional. I went through that when we sold First American, and I remember how tough that was, and so we tried to be very sensitive about it. So.
Which, that's something I forgot to ask. So, there's always significance and meaning behind a name. So, CapStar.
Naming the bank was one of the most difficult and time-consuming parts, because, as you can imagine,
just 59 iterations again.
Yeah, there were a lot, probably 50. We own a lot of URLs. Because you have to go through the process and vet it and make sure it's not used by someone else. And so we thought about Parthenon Bank, with the Nashville history. We thought about Centennial. We thought about Watauga, which is the lake over at Centennial Park. So you can go through the litany, and in each case, whoever had that similar name would not give us permission. And so we said, well, Nashville's the capital.
Yeah.
So Cap, there's 3 stars on the flag, star. So it became CapStar. But with that said, I called our regulator when we named the bank, and she's a delightful person. The woman we were working with lives out on a farm, and I said to her, "We finally named the bank. isn't that exciting? She said, well, what's it called? I said, it's called CapStar. She said, you do know that's the name of a flea and tick killer, don't you? So I was deflated a bit, but I said, we're going with it. So it stuck.
And I did not know that.
Yeah.
And obviously it hasn't held you back.
Hasn't held us back. Yeah.
Did you ever hear from that company, like, you're stealing our name?
No, because they were clearly an animal-based company, so there was no competing as with us as a bank. So that one we didn't hit any resistance on that.
Got it. So, 10 years later on this journey, I mean, and it's been remarkable from literally zero. You'd mentioned the $1 billion, now you're over $2 billion.
Right.
So on this continued trajectory, Claire, what was it that said, okay, time for something new, make a transition and look for new leadership at CapStar?
Oh, yeah. So we do a management succession process as part of our corporate governance every year. And we do that within the organization down several levels, but we also do it with our senior team.
Yeah.
Obviously, we lost the gentleman who was our president almost a year ago. He passed away. Yeah. And so you've always got to be prepared. Our board has a very disciplined and responsible attitude toward corporate governance. And so when we knew that I wanted to start easing out, we did a nationwide search. It's really a perfect world for me now because I spend my time really helping my successor become ingrained in the organization, introducing him to customers, to the regulators, to community leaders. And then I'm out calling on customers all the time, which is what I love doing.
Oh, yeah, I know.
Yeah, it's a
I've seen
complete
that firsthand.
circle. Yeah. Complete circle, right.
Fantastic. So is there a transition timeline for how long?
Sure. I'll work full-time until the end of next May.
Okay.
And then I'll work 2 days a week for about a year after that. So,
got it.
Nice way to improve my golf game.
Absolutely. Frees up a little time, which I know normally
it does.
you don't have.
Yeah.
And I remember reading, was it last year, Claire, you had quite a distinction, quite an honor being elected to the Federal Reserve.
That's correct. Yeah. I'm a member of the board of directors of the Atlanta Fed, which is the 6th district.
So give me a glimpse of what does that really mean? What are you doing?
So we have 8 board meetings a year at which we discuss what's going on in our respective markets. We always hear from economists at the Fed. The responsibility of the Fed, the mandate is really about monetary policy, which is inflation and unemployment. So people need to keep that in mind. That's the mandate. It's not what's going on in China. And so we meet 8 times a year, but we also have a conference call with each of the 9 directors and the president of the Atlanta Fed every 2 weeks to vote on what we think our recommendation to the Federal Open Market Committee, which is part of the Fed, should be on interest rates. And so every 2 weeks on Thursday, we either vote to lower, hold, or raise rates, and then we communicate that. So that's been fascinating because the board is populated with a variety of individuals, 3 bankers, 6 non-bankers, different business people, different acumens that they have. And so it's really quite interesting to be up close and personal.
I bet, because that's oftentimes what gets the most press is, well, what's happening with interest rates? They're going up, they're going down, they hold them, and then why?
Yeah.
So do you know what the results of those votes are each time?
Sure.
Is it 9-0 most times, or is it split?
I can't answer that. We have a great diversity on the board with very thoughtful people with different perspectives.
That's important.
It's very important. And I would say that's the case if you follow any of the press with the differences of opinions between all the people that are on the Federal Open Market Committee right now. You'll know that not everyone agrees.
And you're not sharing.
Can't do it.
It's just fascinating that
it's very
you're on the inside, and the old saying, be a fly on the wall, and hear some of those calls, be part of some of those meetings.
Yeah, it's quite an experience.
I bet. So that's a 3-year term?
Yes.
So, I mean, there's a end to that. You talked about your transition at CapStar. So, I guess first question, as you look into the future, and you went from 0 to $2 billion and have had a great run. So, what's the future look like for CapStar?
Well, if you look at high-performing financial institutions, what you'll see is that you really attain the most attractive valuation based upon the financial metrics. If you're between $5 and $10 billion, $5 and $10 billion in assets. So we're at 2 today. Are we going to be 5 tomorrow? No, not at all. But I think as you move closer to that 5, what that does is help you with your operating leverage, with management of capital, with people, expense management, and you can become more profitable, which will then hopefully translate to your valuation. So I think we're on a good trajectory. We don't want to lose the beauty of being really a Tennessee-based bank. This is such a fabulous market for us to be in, and East Tennessee is a great market in itself. So we don't aspire to really be a national or international type bank. Our mission to begin with was to serve the small to medium-sized businesses, their owners and operators and employees, and that's what we'll continue to do and try to grow it like that.
Well, the way Nashville's grown, it makes it much easier.
Well,
when the city's grown the way it is.
When the city grows the way it has, it also attracts many banks. So there's over 60 banks in Nashville now.
60?
60 different banks, banks and credit unions, not branches, banks. So it's quite competitive.
I knew there were a lot, but
it's quite competitive.
But
that's where the whole CapStar model works, because we distinguish ourselves from the much larger organizations because we can be more agile. We make decisions here locally. We pursue something called tailored client solutions, which means we craft something that works for you. Not necessarily something that will work for the masses. And I think that enables our bankers to be successful and get the wins.
Absolutely. So you talked about the future of the bank and continue to grow and get to that sweet spot and continue to focus here in Nashville. What about you, Claire? What are you thinking?
Yeah, I mean, I love the work I'm doing on the Fed. I love my local board activity. I have several entities that I've been fortunate enough to serve, all not-for-profits. I'd love to do some for-profit board work.
Okay.
I think I've got some experience that could be valuable, and I think I would really enjoy doing that. So.
Absolutely.
Yeah.
You didn't mention your golf game, though.
It's getting better. It's getting better. I'm still working full time, so I'm not on the golf course that much, but maybe once a week.
I know you're still out there, visiting customers and taking care of them,
and if I can take a customer to play golf, then I killed 2 birds with 1 stone. So.
Doubly invested.
Yeah, exactly.
Like you said.
Yeah.
Well, that is exciting. I guess you talked about mentors, so I know when we talked previously, you mentioned Tim, who's your successor. So tell me about that relationship there, because he's the one that's going to take your legacy, your baby, and into the next decade. So
Tim's an experienced banker. He and I get along very well. He's been very respectful as he's gotten into the organization and learned about things. One thing that we wanted to be sure happened was that he has the ability to make tough decisions and not be sensitive of hurting my feelings or something. So I stepped off the board to give him the latitude in the audience to be able to really put his mark on things. And I'm pulling for him, because if he does well, my stock does well.
Oh yeah, I'm sure you've got plenty of stock.
Yeah. So, and he's really become quite ingrained. He loves Nashville, moved his family here, and I'm going to do everything I can to make him a success.
Yeah, I know you had mentioned hiring a search firm.
Right.
And I didn't realize that was a national search.
It's a national search, right? Yeah. He was in Abingdon, Virginia, most recently, at a bank there. So. Got it.
Yeah. Was that difficult finding, the right person?
Well, it's a pretty critical role, and so the board and the committee that was really charged with that really did a judicious. But it's again, all of the directors are investors in the company, and so they care a lot about it. It's their baby as well. And so I think there was quite a bit of effort and thoughtfulness that went into selecting Tim.
Yeah. And I know just the reception I've heard with some of your employees that I've had discussions with, it seems like he's doing really well.
Oh, sure.
Getting plugged in. And
Yep.
Fantastic. Well, I know you've got another commitment, this afternoon, but I did have one question. As we've gotten to know each other, Claire, and you get to know our business, Authentically American. I always love to ask the question. So, what does it mean to you to be authentically American?
Oh, wow. You bring up my patriotism. I think what you all are doing is so great. Yeah. Particularly with all of the sound bites that occur with tariffs, no tariffs, things made overseas. And it's been interesting as I have watched some of my customers who have changed their view on where they do business, who they source from, and trying to do more domestically, certainly doing more with European countries than with the Asian countries as things have evolved, but also really trying to source materials and workers here locally. I just think it's a wonderful country, and it's one that we should be proud of and try to do everything we can to have local products.
Oh, absolutely. And you had said you're going to talk about your patriotism. So where did that come from? I know you're very patriotic. And
yeah, well, my grandfather was in the Army. Served. He also served in World War I. He was actually had several medals that he received for service overseas that we're very pleased with. And then my dad was in the Army before he went to college, so it's kind of in the blood.
Yeah, it's fantastic. I love to hear those stories, because one of the things about not only are we a brand that celebrates patriotism and believes in the American worker, but we also very intentionally want to honor our American heroes.
Absolutely.
Your grandfather and your father who have served, and we donate 10% of our gross profits to veteran and first responder charities.
It's wonderful.
It's
you built a great company.
Yeah, we're just starting, so we're 2 years into this journey. So Claire, you give us a role model. So I know you've talked with a lot of companies over the years, those small to middle market, and we want to continue to grow like you have. So how about advice for us as one of your customers on our growth journey?
Oh, probably a couple of things. I would say really focus on your employees and creating the culture, because as you get bigger and bigger, it gets more and more difficult. So you really have to ingrain that either with onboarding or with frequency of communication, because I think that permeates throughout the entire organization, and that then in turn has a ripple effect on your investors, on your customers, on your community. So I'd say really focus in on making sure you've got the right culture and alignment of values within the organization. Would be the best advice I could give you.
Got it. So I'm curious, because it started with just my wife and I 2 years ago, and now we're up to 8, and we're getting ready to hire number 9. So we'll continue to grow, expand, and you've expanded substantially beyond that. So how did you maintain that communication when there were just 3 of you, like you started? And now there's how many at CapStar? 300. 300.
Yeah.
So quite a different dynamic.
Yeah, quite. And you have to work at it. You really have to work at it. We do a couple of things. We have a monthly publication called The Conversation, where we highlight what's going on at the company, but also with individuals. We have a series of quarterly awards that we give to various employees, both on the sales side, but importantly, those employees that embody the values of the company. Integrity, commitment, customer focus. And then we'll do periodic events out on the plaza. We have quarterly earnings calls that we have just for the employee base, so we can communicate what the performance of the company has been, and really try to encourage people to get out into the community. We have something called CapStar Cares, which is a program in which we give each employee 40 hours a year that they can use of paid time to work in the community for a charity that they are passionate about. we'll have group activities, walks for the American Heart Association or whatever. We've got quite a contingency that's very competitive on who can cover the most steps in a month. Yeah, they're pretty competitive. But I think that helps embody communication across the organization. We also do something called Lunch and Learn, or Food for Thought, where we'll have a group of 12 to 15 employees from across the organization, and we bring them in once a month to have a conversation about a variety of different topics, but to help people that ordinarily would not communicate with each other or know who they were or what they did, other than a phone call maybe, to encourage them to get to know a new colleague and build respect for people that they wouldn't ordinarily work with. So.
Got it.
Yeah.
Well, sounds like over-communicate and giving back and culture.
Exactly.
Are three big things.
Yeah.
Do you ever do one-on-one lunch and learn, Claire? Because
sure.
I could use some advice for me.
Yeah, sure.
On our journey.
Yeah. And that's fun too. That's part of mentoring.
Yeah.
There's a line you can't cross when it's your employee, but
certainly understand. Well, Claire, I know you've got a busy rest of the afternoon, and it was truly an honor and a pleasure to get to know you better and hear your story. And thank you for, making a difference.
Absolutely, it's been my pleasure.
All right.